All right, we've given them enough time to get in. We'll have some people still join in here shortly. Again, this is Jeremy Duncan with Right Way. It's our privilege to one have you on the call. We very much appreciate everybody that's joining these. We've had a really good response rate and a really good turnout, and it seems as if everybody's really benefiting significantly, and we've gotten again a lot of good responses from these webinars. Today we have another awesome one. We are privileged to share with you the Republic Bank program for this upcoming season, and we have two of my buddies that are on the call, Jermaine and Carter. Both of them are super cool dudes, in addition to having tons of experience. If we ask them to, kind of give us their history in the industry, we would run out of time and wouldn't get to their program. They're both incredibly knowledgeable. Many of you probably already know them or have had an experience or run across, cross paths in some way, shape, or form. So just want to welcome them to the call. Carter, Jermaine, are you guys hearing us on the call?
Yes, sir.
Cool. Well,
yes, sir. Thank you so much for having us today.
Absolutely. Thank you guys so much for attending. So kind of the flow and format of what we're going to do, I'm going to switch the screen over to you guys, so you're going to be in charge here in about 2 seconds. And the way that we generally do it is I kind of monitor the chat function of the meeting and request that anybody with any questions related to that specific topic that we're in, go ahead and submit those immediately. And whenever there's a pause or a good point for me to politely interrupt you, I would then pose those questions to you guys. And anything that's outside of the topic being covered, just because I'm sure you guys are going to cover it at some point, I'll kind of refrain, hold back, and just queue those up. And then when we get to that topic, pose them. And if they're outside the scope of anything we've talked about, save them to the end as kind of for the Q&A portion of the call. So I think that's kind of our little ground rules we'll rock by. I'm going to now switch the presenter over to you, Carter. Here it comes in about 2 seconds. Let me know you get that the request to show your computer. There we go. Awesome. With that, again, thank you, Carter, Jermaine, for being on the call and making this time and putting this presentation together for us and the Right Way community. So with that, I'm just going to shut up, let you guys rock.
Thank you all for joining us today. We're happy to meet with you, talk with you some about our program. We're excited to be a partner with Right Way. Looking forward to this upcoming year. We'd like to hit the highlights for what we think pertains most to your business. As he said, please feel free to pose any questions you have. So let's start from the top. Basically, the refund transfer program that we have with Right Way is $39 per federal and $10 per subsequent funding fee. Essentially, that means whatever comes in first, we apply the federal fee, and then each subsequent funding, we apply the $10 fee. We do, for every funded net spend prepaid card, we pay a $5 additional incentive for issued cards. Okay? This next year, our easy advance amount has doubled. So essentially, the big difference with Republic over the other providers is you always know the amount that your customer will receive. Our advance amounts are $1,000, $1,500, $2,500 for a cost of $68. If you bear with me, we'll get to the details of how we arrived at that number as well. We actually do it based on the net refund. That's how you know the advance amount your customer is going to receive, because if their net refund, which is refund minus fees, is $1,000 to $2,999, they're eligible for the $1,000. $3,000 to $6,999, they're eligible for the $1,500. And $7,000 or more, the $2,500. So there is no offer and compromise or bait and switch. It's on the basis of their net refund. and that cost is $68. And really, we arrived at this amount because we felt like going 40, 60, and 80 was a little convoluted and difficult as a moving target, so we did an aggregate or average of those fees to come at one amount for the advance. What we also did is kind of assessed the advances approval rating based on the taxpayer demographic of millions of taxpayers. So, you know, when you ask yourself about how many of your taxpayers are going to receive that, what we looked at is about 8% of taxpayers should be eligible for the 1,000. About 61% of the taxpayers should be eligible for the 1,500, and 31% at the 2,500. So over 92% of your taxpayers are going to be eligible for the 1,500 or greater. Nobody else can do that. Nobody. The other thing that we want to mention is our average advance last year was $1,201, which was about $400 higher than the market average from what was issued from Meta. What we know is the largest issue of advances last year through Meta was H&R Block. They were $815. We were $1,201. We anticipate that average to go up to $1,700 this year. Advances aren't really something that you feel many of your taxpayers are going to ask for, something that's not as much of a focus for you. We do have the Easy Advance Basic. That's with the net refund of $1,000 or greater. That advance is $1,000 for just a cost to the ERO of $40. It does begin during hub testing. Last year was January 12th. This year they have not yet disclosed when the start of e-file is. It's available to first-time EROs. It is available in all 50 states. It is available for all disbursement types: check, direct deposit, debit card, and Walmart direct to cash. And taxpayers are approved only for the advance applied for, no bait and switch.
So
it does begin during hub test. Yeah.
Just a quick note on that. So in the program, they are able to select in the software the loan amount they're applying for, whether they want 1,000, 1,500, or 2,500, or do they apply at 2,500 and get whatever?
That's a great question. So the advance amount that's provided for the taxpayer is based on the net refund. They're not applying for a specific advance amount. The advance that's available to them is based on their net refund. So if their refund minus fees is within that range, that's the advance that they're eligible to apply for.
Got it.
And if I can just add a little bit, I didn't intend to talk, so I apologize, Connor. But so one of the earlier things that he was saying was regarding who's going to get what. And I think that's extremely important because Republic's goal is always to get the taxpayer as much as we possibly can. And what we did, you know, I can't tell you exactly what's going to happen in 2018, but what I can tell you is based on the taxpayers who applied for advances in 2017, our approval breakdown is exactly what it is that you see. Based on last year's customers, 31% of the people would be getting the full 2,500, which once again, I don't believe anyone in the market can match. 61% of the people would be getting 1,500, and by the way, if you combine those two, that's 92% of the people who will be getting 1,500 or better, and the remaining 8% will be getting 1,000, and that is significantly higher than the market, and more importantly, it allows your offices to not only compete with the mom and pops, but the national chains as well.
Yeah, and the only thing I'd like to add to that is 89% of our approved customers got the full $1,250 last year. So our average advance amount was significantly higher than the max average. And the sign outside on your door, the taxpayer is actually eligible to receive that amount. It does not amount just to get them in the door to compromise for some lower amount like $500. Any questions? All right, moving on.
No, I think it's just significant to point out the disbursement options available there that you guys have: check, direct deposit, and card. Am I correct in saying that?
That is correct. Our disbursement, our different disbursement methods, which include check, direct deposit, a prepaid card, the NetSpend prepaid card, and also the Walmart direct to cash, which is where the customer can go, and he'll get into this a little further. They are available with all of our product options. The only other thing that I will add there is to emphasize hub testing a little bit more. And once again, hub testing is where the IRS is basically sending back during testing, they're sending back live acknowledgments on actual returns. Last week they started that 2 weeks before IRS officially opened for e-file, and as that happens, as you start to see those stray acknowledgments from the IRS, Republic Bank is taking those acknowledgments, we're approving loans, and we're putting checks out in the street. And I think the the person who has the early checks, the early large checks, is the person who wins the preseason business.
Couldn't disagree. Money on the street, as I jokingly referred, money on the street equals butts in the seat.
Yep.
Trademarked Right Way.
All right. So receivables assistance. A couple things we want to highlight here, but with the PASS Act in place, there's a much greater need for preparers to be able to come up with early season money. Having the money to deal with the day-to-day business, especially in an office where there's a greater, percentage of the taxpayers that can't afford to pay you up front. So our receivable assistance does start during hub testing. It is a tax preparer fee advance, and we do up to $250,000 per office, which clearly sets Republic apart. TPG's Simple Paid was $132,000, RA's was somewhere around $100,000. One of the main reasons why we do so much is that we don't want EROs to run into the limit when they're still in need. Okay, it is up to 50% of the tax prep fee that we advance out once the IRS begins acknowledging, and we only collect back 50% until paid in full. But typically, at some point, it will transition to the 100% collection on the 10th day. We only do a 2% origination fee based on each dollar loaned, and the repayment is once funding begins. But this will help ease your cash flows at the beginning of the tax season. And the reality is, I think we only had, 3 EROs that even tapped the limit of this last year at the $250,000. So the dollars are available. Any questions? Okay.
It's a lot of cash.
It is available to first-time EROs as well. We do not stipulate that you have to have had a certain amount of bank products or a prior history with us to do that. When I say first-time EROs, that's not just new to Republic. That's new to the industry first-year EFINs. It's important to distinguish that. New for Republic this upcoming year is we're doing preseason advances. Okay? We're providing money beginning December 1st, EROs to help get prepared for the tax season. Office startup, office equipment, promotional expenses. It ranges from $3,000 to $40,000 per office. We ask that the office have a minimum of 100 RTs. It is more than double our competitor's office offering, and the opt-in actually happens through our website, the Taxpayer Information Center, republicrefund.com, beginning November 1st through December 14th. Money will be issued December 1st, 8th, and the 15th, but not after the 15th. So come November 1st, you'll be able to opt in through our Taxpayer Information Center to get that all the way up through the 14th. But keep in mind, if you've opted in prior to December 1st, you're going to be in that first issuance of those dollars going out. The 8th and the 15th are people that have opted in after the period from when the first drop occurred. It cannot exceed more than 10% of the prior year fee revenue, and it's not contingent upon the amount received from the receivables assistance as with other providers. And one of the big things, any prior experience with Republic Bank will have you be eligible for this program. You do not have to have used us in the previous year, the immediate previous year, just in some year previous and been in good standing. The advance is repaid through tax preparation fees once the season begins. It's a first-year program, so any questions?
Let me add, if this is something that you are interested in, I would ask, our enrollment begins on November 1st for the preseason wrap. I would advise that you get your enrollment in early because the thought process here at the bank is for those that have their paperwork in early, we are considering moving up the first payment from December 1st to November 17th.
Ooh, you told him that.
Uh-oh, he threw it out there. There's a carrot. I'm going to put November 17th in parentheses here as far as the start date. And I'm going to asterisk and put Germain in there as well.
I've already got the okay internally.
Oh, change the slide deck.
One of the things that we'd also like to highlight with you today is some of the additional things that we do that feel like set us apart. We do taxpayer text updates for checks being released, the difference being that we don't send our first text until the check has been printed. And then beyond that, we allow you to stagger the issuances of those text updates from 1 to 24 hours. Because oftentimes you'll have checks to print and your office still hustling and bustling, and then while you're in the midst of preparing returns, it's difficult sometimes to get some of those checks out. So we do provide you the ability to kind of defer that communication on the basis of when the check's printed. We also have a site for taxpayers to check on the status of their refund at republictaxpayer.com. We do have a mobile application that you, the ERO, can install to your phone called Republic Bank TRS. You can go search for it and install. It's Android or Apple. And there are multiple tools through our online system through the Taxpayer Information Center for reporting, training. We do provide multiple webinars in November and December. And the compliance test, ordering supplies, marketing that you can go out there and see as well. Once enrolled, please feel free to contact us about this, as we'll be happy to go through it with you. We do send out a marketing starter kit at no cost, but if you have the need to get those large banners out in front of your office that say up to $2,500, which mind you is one check of $2,500, please go out there and look, as in November we will have updated the marketing supplies for you to be able to take a look at. One of the other things that we wanted to highlight with you is that we do have a new VIP option available. So if in the instance, you know, we have spoken with you and you have the need to talk with us here amongst the more seasoned crew, we can make the VIP option available to you. Just let us know when you talk to us post-enrollment that that's something you'd like to be a part of. Okay? Any questions?
What was the name of the mobile app?
Republic TRS or Republic Bank TRS?
Republic Bank. And that's for EROs and not taxpayers, correct?
That's correct. And
But
the
you-
nice thing about the application is when checks are being released, it will send you messages letting you know that you have checks to print through your phone and the application in real time. So it keeps you up to date with what's going on and what's coming down the pipeline through the app rather than you have the login through the system, which is very useful, especially for offices on large check printing days.
Sweet. Anybody got any questions to come through? I'm monitoring the chat and not seeing much in the way of activities. If I'm missing something, I don't think I am, but oh, maybe I need to switch it to that. Nope, still nothing. You guys must be thorough. You got it covered.
All right. So check cashing. There's one thing in particular here that sets us apart from the other banks, in my opinion. But what we want to let you know is we do have Wells Fargo check stock, Republic Bank check stock. We do have a letter of good funds that you can provide to a local bank. Then, of course, Walmart in some of the larger markets or even the rural areas, there's check cashing as well. We also have the Walmart Direct to Cash set up directly with Certegy. Okay. For Wells Fargo check stock, if you choose to receive that because you have branches in your area, you can cash checks up to $8,000 for usually a fee of $7.50 fee. If you have a Republic Bank check that you're cashing in a Wells Fargo, it's up to $5,000 for $10 or 1.5%, whichever is less. Republic Bank is located in 5 states. Feel free to contact us and we'll go through that with you if that makes most sense for you to get Republic Bank check stock as opposed to the Wells Fargo. And we also can provide you a letter of good funds to provide to a local branch to try to get an agreement for check cashing as well. Of course, Walmart, checks from $1,000 to $7,500 or $6. Checks less than $1,000 or $3 or 1% is less than $300. And the Walmart Direct to Cash is $7 for up to $7,500 disbursements. The difference being is that fee does cover the multiple disbursements.
You guys are gonna make this really hard to put into a matrix and summarize all this stuff in like one slick. You got so much stuff going on. It's awesome. It's a good problem.
So that concludes our presentation for today. You know, one of the things that we really want to emphasize about our loan this year is that the amount that the taxpayer applies for is the amount they're going to get. Ours is a full $2,500 advance, and we want you to see that as a benefit to you in the marketplace, as taxpayers today want to see something that allows them to pay 1 month in bills and have a little money left over. And we really feel like this amount starts moving in that direction to peak taxpayer interest.
And if I can add to that, I think generally the sense is that you've got long-term customers who are getting $500. You've got a $2,500 sign, and they're getting a $500 advance, and you're stuck having to explain to them why it is that that person who believes they're your best customer has got this really small loan. This right here, we're telling you right up front, there are only 3 tiers, 1,000, 1,500, 2,500, and your taxpayer knows that. They know the reason why before you even transmit it. So it kind of sets the expectation and know that our program is purposefully geared to be the most aggressive in the marketplace.
So let me ask you this, guys. What are some of the things that would cause a taxpayer to not receive a loan? We had a little bit of a surprise last year with respect to certain providers having, returns that contained XYZ form and didn't have a XYZ form on it as well. That would then DQ them. Let's say if they didn't have a 1099 or a W-2 attached to a Schedule C return, it was straight Schedule C income, self-employed, early filers, pretty common scenario. Are there any things within the specs or the underwriting criteria for a taxpayer such as that? Or
there is no particular situation that would get you denied 100% of the time that we don't pre-disclose on our application. However, there are things that lessen your chance, and there are things that make your chances a little better. For example, if a person has 100% Schedule C, no W-2, and they've got earned income credit, that's a pretty risky loan for the bank. But you know what? If I know how that tax return funded in the prior year, or maybe the prior year and the year before that, then it makes me a little easier in making that loan. Clearly, we are not the risk folks, but it's all based on our system is built on the likelihood of the IRS funding a tax return that looks like this. And yes, if it's a standard, one W-2, 2 children, and they're both your, son and daughter, that makes things a whole lot easier whether I know their history or not. But those other things, if I know more about what happened in the prior year and with their funding history, then it makes it more likely. That's why we don't have the guaranteed upfront denials that many in the industry also have. Because my risk guy actually feels like in many cases, although risky, we have the ability to lend in this area because we know a little more about the taxpayer.
And we still have the same scenarios where military is a DQ, right?
The military is not a DQ.
What?
No, this is a 0%. This is a 0% loan.
It's no recourse, so
no recourse, and it's the APR is 0%. This is military can't apply for this.
Maybe I misread that somewhere else from somebody else, or maybe it was a carryover from the previous year, or maybe it's something weird. I don't know. Okay, so let me. They obviously got to be 18 years or older.
Correct.
That's pretty okay. So going through the items, let's see what I don't have checked off, and it's probably because I wasn't able to scribe it down as we were talking. We still don't have any questions coming in, so everybody must be just getting it. The qualifications to receive your in-season capital. I know that there was they're not going to the in-season capital won't exceed 10% of their prior year fees. Was that correct?
So with respects to the ERO preseason advance, the money to the dollars to the ERO,
Okay.
we are not advancing out more than 10% of the prior year fees. But we are not specifically assessing the amount they're advanced on the basis of that alone. It is kind of a combination between their product count and their fees, because as you know, each ERO charges a different fee to different taxpayers. So we've assessed a range for which we feel that would be acceptable. As it relates to the receivables assistance, that is done at the time that the return is acknowledged, okay? So there isn't really any measure for what percentage of their fees to just say that it's up to $250,000 that we will advance them on the basis of 50% of the tax prep fee once acknowledged. The only thing that I'd like to add is with respects to RAP and the ERO advance, we're asking that if you have the ERO advance, the preseason RAP, that you have twice the amount of money acknowledged in fees from the IRS prior to issuing out the RAP dollars. Therefore, if you have $5,000, you need $10,000 in acknowledged fees before we begin issuing out the receivables assistance.
So simply put, just consider it part of the same program. The money that we've already given kind of sits in a kitty until you have exceeded that. The only thing that I'll add about the in-season money is we specifically chose that dollar amount because nobody was hitting that dollar amount. If you look at the agreement and it says that you're applying for $100,000 instead of $250,000, don't think that we're weird. It's just that because you put on your application that you expect to do 500 RTs, then we, from a banking standpoint, we move that number down from 250 to, let's say, 100 because we know you'll never hit that. It's basically a calculation that we have to do. So if you see a number other than 250, it's because the system is trying to make that number specific to what goes on in your office.
Actually, okay, so here's a question. Can you elaborate on the 2% origination fee?
Correct. That is a 2% flat fee, and sort of like I kind of said, it's considered the preseason and the wrap kind of all the same money. So when we repay ourselves, it is basically if we advance the total of $70,000, there is a one-time 2% fee, whether that money is paid. Most people do, 1.5% to 2% per month. Ours is a flat 2%, regardless of if it paid back in early February or late January or late February. It is just a one-time 2% fee. So basically, that is $20 for every 1,000.
Okay. Got another question here. Is there any sort of preseason Christmas cash loyalty card, prior to acknowledgement, you guys extending a small pot of money that they can then disperse to their taxpayers, but they're on the hook for? I kind of added to that question.
From our perspective, that's one of the things that we're doing the preseason money for, so that offices can do that sort of thing. Although we don't have that program, we figure if we're giving the office the money, they can do with it, whatever it is that they need. Some people are in, Texas and Florida, and they need the money to actually get their offices back up and running. Some people need it because they're trying to expand. Others can use it to establish programs like this, or maybe a $100, in-store rebate or something to that effect. You can do whatever it is that you want to do with it.
And keep in mind, our preseason advance is significantly higher than what the market is currently offering. So we've anticipated that there may be a need for things beyond just what's in the office for that, right? If we're doing up to $40,000 versus $18,000, then that's $22,000 more you could be eligible for to utilize something just for like that program.
I mean, just throwing it out there, I mean, they could even just send it to me, right? I mean, whatever they want.
Sure, that works too.
Just gonna plant a seed. I mean, take it or leave it. Just send it to Jeremy.
Or if they want to send it back to the bank, send it cash.
No. Oh, send it cash. Yeah. Attention, Jermaine. All right, those can't be the only two questions we've got from our audience attendees. Let's see what else. What else did I miss? When will the in-season capital cutoff date be? Meaning, you guys are starting at X time and it's going to end after X time. Usually, it's the first big funding. But are you guys waiting till the pool of money within an ERO's bucket, if you will, gets over a certain dollar amount or a certain number of products before you start pushing the in-season money?
That is a wonderful question, and it led me to the fact that we forgot some of the details on the in-season money. Okay, so the preseason money is in December, but
Right.
even the in-season money, we're actually doing that during hub testing as well. So if the IRS starts hub testing when they did last year, which was January the 12th, the moment we get those IRS acknowledgments, not only we're putting checks on the street, but we're also putting money in ERO's bank accounts. And we will do that. Last year we did it from January 12th through right around February the 5th, so right around through what was traditionally peak. From there, we are actually collecting incoming prep fees. Most collect 100% of your incoming prep fees. We actually only collect 50% of your incoming prep fees, because if we're collecting at 100%, all we're really doing is moving your cash flow issues from January to February. So what we do is we collect at 50% up until after the PATH Act date, which is February 15th, to ensure that when the big payment comes in, we're at 100% by then. So we're essentially doing outbound payments from roughly January 12th, depending on whenever the IRS starts, through about February the 5th. And then from there, and the agreement, just so you'll know, the wrap agreement will have the specific dates on it. But we'll do it through February 5th, about February the 5th. We don't begin collecting at 100% until right around February 16, 17.
And obviously, there's got to be some sort of velocity minimums, meaning the rate at which tax returns are coming in. If an ERO is sending in 2 returns a week, and by that time frame they've only got 8 returns in the pot, you guys there's got to be some sort of minimum threshold to qualify. Is that stated, or am I projecting based on what I would do?
No, and you know what? That is a totally awesome question. But let me tell you that, once again, other than the December money, other than the preseason advance, every other thing that we have mentioned today, the $2,500 advance, the in-season money, the free marketing materials, the advancing money during hub testing, the putting out loans during hub testing, every part of our program, other than the December money, is included for everyone that we approve. Everyone.
What was the 2,500? Was that I don't know. Did we touch on that?
Yes, that is the maximum loan amount to the taxpayer.
Oh,
every part of our program is for every approved office. Some people will approve you, and then a week later you're going to find out, oh, I can't get the prepaid cards. Nope, guess what? We're the bank on the prepaid card, so we underwrote you for that when we approved your office. Some people are going to approve you and say, no, you can't get the in-season money. Guess what? We underwrote you for that when we underwrote your office. Same with the loan. If your office is approved, just know that they have everything available to them.
So that's amazing. I'm glad it's your money and not mine that you guys are doing that with. But
I hear that quite often.
Yeah, I mean, you guys
but
have
usually about me.
So in terms of qualifying for the in-season money, just to touch on that topic again, there's got to be some sort of velocity or some sort of minimum threshold by which returns are being submitted that you guys are going to start floating. You're not going to do it on 1 return or 5 returns or.
We absolutely do it on 1 return every day.
You're high.
No, because 50% of the tax prep fee is what's advanced out.
50% of the tax prep fee is still 50% of the tax prep fee.
All right. And again, glad it's your money and not mine. I'm putting in
Well,
none.
let's hope everyone here knows that that's another reason that why Republic tries to just make it easier here. Sorry, that's our slogan. I had to throw it in there. It's
Well,
just easier here.
you know what? We like to say because you guys are doing it the right way. So, um,
Pun intended.
yeah, absolutely. So, ERO qualification, if you're approved, you're approved. Deal killers, minimum refund, loyalty program, tax office reporting, something that I think is incredibly important, especially with the number of variables and the dynamic sort of products that you guys are offering that are advances on, future revenues for the tax office, in which case they then need to be recaptured by the bank. One of the things that we noticed last year, and we got calls, and I'm just saying it halfway for the recording and halfway to address the reporting issue, is that people mid-season, once money started, their actual deposits started flowing, and then they were offset by what they should be paying back based off of what they were advanced. There was kind of a, as I described it, an aha/oh crap moment, because they weren't necessarily tracking how the money was coming in. Their, tax season's organized chaos, so they're, doing everything they can to not drown and keep up with the tax returns and so forth. So tracking the reporting and the liability, if you will, based upon receiving the advance fees, is there any way for them to kind of see the ongoing liability, or basically the accruing debit to their future deposits, so that there isn't an oh crap, and maybe the source thereof?
Let me address this in two parts, Jeremy. Having had some experience in the industry over the course of years and with, a variety of different providers, that oh crap moment is a necessary evil. I think part of that comes from the fact that it's easier to receive the money than the time in which the money comes due, and sometimes deriving that can be a challenge. Having said that, yes, we do report to it for the receivable assistance and the ERO advance. However, we also have something within our fee disbursements that we actually show the adjustments based on the fee disbursements to the preparer in real time within a given day. So for instance, although they can see reporting to determine like the accumulation of dollars lent, the total liability versus what's been collected, they also have the ability to drill down at an individual level from the fee disbursements to see the offset. What will happen is the money that's provided to them is, listed out there, and the money that's adjusted from either the ERO advance, the wrap, or the advance itself is contained within brackets to simply show, that there's been a debit, and then it shows the total amount. So they can look at it at a higher level overview, and they can drill down to individual instances. But having said that, we understand, because we are all taxpayers. Some of us been preparers before as well, and that challenge. We also encourage that even though our reports will provide this information to them, that if anybody's uncomfortable in kind of deriving that themselves, they call and have us help explain it to them, because we deal with these situations every day in every way, and for that reason, we're very well versed in helping them understand how these tools are at their disposal. So the oh crap moment, it's going to happen, but we can help them and understand how to utilize those tools through our Taxpayer Information Center. And more specifically, I think the fee disbursements report is what kind of helps them digest it, metabolize it.
I think that would. I think, yeah, and if they have a way, or we have a way to go in and just see kind of what that total's accumulated to, it's just so that they're, there's a number of things that contribute to the offset, and it's something that I'm now realizing that I probably need to write an article or some sort of email out to everybody as far as for each bank. These are the items that are going to contribute to that that future debit to your prep fees. You've got, if you're issuing loans, if you're taking in the preseason capital, if you're participating in the in-season capital, those things are going to accumulate, and then give them some sort of a one-pager to say, here's how you can now monitor that offset. You know what I mean? Something to that effect of just giving them some sort of reference guide as opposed to figuring it out on the fly while everything's coming at them chaos.
I'm glad you said that, Jeremy, because there's one other thing. We actually provide next to the adjustment the description associated with that adjustment for. We actually break it out. So there's like the advance itself has a description, the receivables assistance has a description, and the ERO advance would have a description. So even though the ERO advance, the pre-wrap and the wrap are accumulated, we actually provide some level of delineation amongst those items.
That's at the point of the funds hitting, as opposed to prior to the funds hitting. So, or am I saying that correctly?
Well, right. So there are different reports for each one. You have an ERO advance report, a receivables assistance, an advance. But with respects to the fee disbursement, when they're trying to judge the adjustment to a particular fee deposit, all three are present within the fee disbursement, but the reports are each separate because it's much more difficult to arrive at a conclusion based on taking multiple factors and combining them in together. A lot of times people want to know, well, what for this and what, because they'll justify the advances versus the pre-wrap versus the wrap based on that. But within the fee disbursement, we do list out the detail, together, because they need to know how that adjustment was made, and they don't want to see just a combined figure because it's more difficult for them to kind of separate that out, right?
For sure.
So what I tell people to do is run the individual reports, have those, and then look at the fee disbursement, and they can reconcile a lot easier. Typically, this doesn't occur until post-February anyway, because people are so busy that they're really kind of just trying to get through things. They can't quite realize, understand, wait a second, my fee should be this, they're not this. So they kind of circle back around to it when they have time, and they start asking the questions, right?
Agreed. Another question, and I think this is actually from one of our internal, one of my coworkers. They're saying, is there anything that we as Right Way need to do on behalf of the ERO to enroll them into anything, or is that completely in their own hands, meaning they have the power of the opt-in to all Republic programs?
It is in the ERO's hands to enroll them into any of the programs to participate outside of enrolling to be within the Republic Bank. You opt in through the Taxpayer Information Center for the peripheral programs that we provide.
And so here's an example. So when you do the Republic Bank Preparer training, you go to our website. That will be live, I believe, beginning November 1st. And right at that exact same time, the ability to opt into these different products will be available on our site as well.
Perfect. I think these are more comments than they are anything else. Somebody says, I love Republic Bank. Another one.
I agree with that. Very intelligent person.
Great job at Republic Bank. That's unreal. So I think we're getting a fair response here. That's good stuff. As far as the questions go, I'm pretty well tapped in terms of what I had. You guys have been very informative, and I mean, everything's awesome. Anybody else with any sort of questions, please submit them now so that we can utilize Carter and Jermaine while they're present in the flesh digitally.
I also want to add that I understand how informative, the Right Way folks can be, but if you have any questions that you just didn't think about, feel more than free to reach out to to Carter and his team. That number should actually take you to his page. But if you don't and you need Carter specifically, we're not too big of an organization where you can't ask for the sales manager Carter Dempsey.
So don't ask for Jermaine.
You can, but if I'm on the road, it'll be like 3 days later. It's fall break. Me and my wife are going on a cruise.
What?
Yeah, sorry about that.
Unacceptable. I think one last core question, and I think I already know the answer. Sharon, do you have to have 100 products in order to opt in? No, but I'll leave that to you guys.
You do not. The only thing that has any volume requirement to it is the preseason money, and it will still allow you to opt into it. It'll still allow you to sign up for it. It's just that if you're not at 100, it's possible you could be denied for the preseason money. Everything else, nope, feel free to opt in. It's there for you.
All right, and then are you able to request the amount of the preseason? So I don't want to take more than I need.
Yes,
Gotcha.
you absolutely can. So actually, I'm going to keep this brief because it can be a little complicated, but when you go opt into the Taxpayer Information Center, after you agree, there's going to be the top amount you're available to be eligible for defaulted in the view. You can open it up and select an amount less. If in the instance you feel like the tier provided for the basis of total fees that you have, say your average fee is $400 versus $200, then there is even a medium to call in and say, hey, based on what I'm seeing, I feel like I should be able to request a little more because my average fee is $400, not $200. There's even a process for exception there. Now, keep in mind this exists within the rules of law and perimeter, but we want to make this as easy as possible for you and have you understand that, yes, you're selecting the amount. Yes, you can request another amount on the basis of some extenuating circumstances.
So based on, let me simplify that for you. Based on your prior history, and that is whether or not you were with Republic last year or the information you submitted on your enrollment record, numbers will be in front of you. If you think those numbers are insufficient, pick up a telephone and give us a call. For example, if it's saying you can only apply for up to $5,000, and you're saying, but what do you mean? I did 700 bank products, and I had, $700,000 in prep fees. Of course I qualify for significantly more than that. The truth is you don't know it, but on our end, we based that specifically on offices that were not with us last year. We based that on the information that you put in your application. So if you were in a rush and you put down, you did 100 bank products last year, and the truth is you did 1,200, then you didn't realize it, but that keyed this thing later on. So if you feel, and I'm not asking anybody to take their time and redo the application, but if you think the numbers that you're seeing are wrong, pick up the telephone and give us a call. The other thing is that if you're going to do it, be prepared. If you were not with us last year, be prepared to have your prior year stats with you. The system will actually, rather than you email it to us or fax it to us, it will actually ask you right now if you would like to upload those PDFs. If you'd like to, that will actually get your process through significantly quicker. Nobody even has to pick up a telephone and give you a call.
That's cool. Are you guys doing a soft credit hit on all of those?
No.
We are not. So here's what we realized. And just in case you didn't know, I've been in the tax business for 20 years. And what I realized is whether or not a person paid Macy's has no bearing on whether or not they have a good tax office. So we do a lot of other things. Just like for the taxpayer level, whether or not that person paid Macy's, it has nothing to do with whether or not this tax refund is going to fund. So we look at other things to validate an office that is not related to one's personal credit history.
It's something I almost skipped over. What is your prep fee cap?
So programmatically, our fee cap is $999.99. We have also raised our average tax prep fee from $600 to $800 this year, which means that within a given week, we ask that your average tax prep fee not exceed $800, but the system will allow a tax prep fee up to $999.99.
And all of that will be inside your preparer training.
Sweet. If nobody else has any questions out in the field, I think I am tapped out as far as what I've got. If you guys have anything, Jermaine, Carter, please feel free to share.
Nope, I think we're fine on this end. Thank you guys so much for your time. And once again, if you have any further questions, concerns for us, feel more than free to reach out to us.
Exactly. We're honored to be a part of this presentation with Right Way and Euros and people there. Thank you so much for providing this opportunity.
No, thank you guys for joining and contributing in the way that you have and the effort. We know that putting these presentations together, and it's not always the easiest thing, and talking intelligently for the period of time that you guys have, it's not always, I screw it up all the time. So thank you guys for your effort. Thank you for your friendship and the partnership, and yeah, it's rock and roll. Let's have a fantastic season, and thank you everybody who attended. We will be distributing this recording, and hopefully I can get the PowerPoint, the slide deck from you, Carter.
Yes, right
Cool.
after this.
Cool. Do you have any other marketing material, one-pagers that kind of touch on any?
I have a slip sheet for you.
Cool.
And some PDFs on marketing.
Awesome. So we'll get all of that zipped up and put into one little neat package and distributed to everybody as well at the conclusion of this or shortly thereafter. Thank you everybody. Thank you, Carter, Jermaine. We appreciate it. Let's have a great year. Thanks so much.
Thank you.
Thank you.
All right, later guys.